Have you ever wondered what Tesla's stock price will be 1 year from now? Post-stock split, experts predict quite a low price for Tesla stock for the end of this year. Now, other experts have varying opinions on how much Tesla stock will be next year. You will definitely want to see this through. Tesla stock could hit $400 over the next 12 months, says an analyst. Experts believe that 2023 is set to be a big year for Tesla, especially with the potential launch of both the Cybertruck and Semi, which a lot of consumers are looking forward to. However, it is the large potential cost benefits from two different sources which Deutsche Bank's Emmanuel Rosner believes could have a big impact on gross margins. Looking ahead to next year, we now forecast Tesla could lift gross margin by another 300 BPS year over year thanks to positive mix shift towards lower COGS production facilities and benefit from IRA's battery production credits in the US, Rosner explained. Rosner thinks that by expanding the manufacturing footprint to lower COGS regions and facilities, namely the New Berlin and Austin plants, which are cheaper to operate than the Fremont facility, Tesla could generate an average cost reduction of $2,400 per vehicle, or 6.5%, taking into account that it starts from a base COGS or cost of goods sold per vehicle of $36,000 in 2021, before the impact of the increase in the price of raw materials and inflationary costs, which via product price hikes. Additionally, U.S. battery production credits in Fremont and Texas could save another around $800 per vehicle when averaged out on a worldwide basis. Put together, the potential cost reduction of $3,200 per vehicle could amount to an improvement of 5.5% of the average selling price. Although keeping a lid on expectations, Rosner conservatively only boosts 2023 gross margins by 200 BPS from 29.5% to 31.5%, suggesting a 300 BPS improvement from 2022 levels. That results in adjusted EPS rising from $6.60 to $7.15, some way above consensus at $5.82. That said, Rosner raised his 12-month price target on Tesla from $375 to $400 while reiterating his buy rating. On the other hand, the Street's average target remains a more subdued $311.97, which suggests the shares have about an 8% upside from current levels. Looking at the consensus breakdown based on 18 buys, 6 holds, and 5 sells, the analyst's view is that this stock is a moderate buy. On the other hand, a Deutsche Bank analyst explains that 2023 is a pivotal year for Tesla. In fact, the bulls on Wall Street continue to pile back into Tesla stock, citing a host of potential catalysts. Deutsche Bank analyst Emmanuel Rosner, through a note out in mid-September, said he believes the rally in Tesla stock is just beginning, with several likely drivers for the company in 2023. We view 2023 as a pivotal year in which Tesla continues to grow volume at a high pace, enters new segments with Cybertruck and Semi, optimizes its manufacturing footprint, and benefits from IRA, Inflation Reduction Act, which will lower its cost and boost demand. Rosner wrote, "We see considerable room for upward revision to 2023 street estimates from these factors, with additional upside potential to gross margin from full self-driving, with every 5% improvement in global take rate on new sales boosting gross margin by another 80 basis points, which is not in our base case scenario." The EV maker stock is up more than 40% in the past several months, thumping the NASDAQ Composite's 8% gain and outperforming rivals like Ford and GM. Wall Street credits the push higher to optimism around new government legislation that will support the adoption of EVs in 2023 and beyond. Tesla's strong execution in the first 2 quarters of the year has also improved investor sentiment on the stock, which took a slight hit in August amid a broader market pullback. Rosner expects improved manufacturing cost as a key profit tailwind for Tesla moving forward. He said, "While the company's gross margin improvement has slowed down this year due to costs and inefficiencies from COVID-related lockdowns and ramping up new factories, we believe Tesla is still on track to grow this metric in 2022, the analyst wrote. More importantly, looking ahead to next year, we now forecast Tesla could lift gross margin by another 300 basis points year over year, thanks to positive mix shift towards lower cost of goods sold production facilities and benefit from IRA's battery production credits in the US. Rosner added, starting from base cost of goods sold per vehicle of $36,000 in 2021, before impact of rising raw materials and inflationary cost, which the company is largely offsetting through product price increases, we estimate Tesla could generate $2,400 per vehicle or 6.5% average cost reduction from expanding its manufacturing footprint to lower cost of goods sold regions and facilities, and another $800 per vehicle in the U.S. battery production credits in Fremont and Texas averaged out on a global basis. Altogether, he added, the combined potential cost reduction of $3,200 per vehicle could represent a benefit worth 5.5% of average selling price, but we conservatively only boost 2023 gross margins by 200 basis points from 29.5%, representing a 300 basis point improvement from 2022 levels, and increase adjusted EPS from $6.60 to $7.15, considerably above consensus of $5.82. Rosner highlighted a potential demand boost from Tesla's Cybertruck and Semi vehicles that are expected to come to market in 2023. Longer term, we see more room to improve on gross margin and even higher potential on operating margins as volume ramps up, Rosner said. We continue to view Tesla as one of the most attractive stories in the autos sector, thanks to its pricing power, superior cost structure, strong execution, and having secured supply and now establishing more meaningful capacity to support considerable growth. Others predict the Tesla stock post-split will hit $500 by 2023. They believe that there are other positive catalysts to that aside from the excitement surrounding the stock split itself. First, Musk tweeted a hint that 2 new EV models will be shipped out. Tesla 500-mile range semi-truck starts shipping this year, Cybertruck next year. He wrote. Also, Tesla announced that it has reduced the delivery waiting time for the company's Model Y in China from 8 weeks to 4 weeks. This is a good sign, as it suggests that Tesla's supply chain issues may be easing and that there's strong demand for the Model Y in China. Perhaps best of all was when President Biden signed the Inflation Reduction Act, which provides a tax credit of up to $7,500 on qualified new EV purchases. This should accelerate the proliferation of EVs in general and Tesla cars in particular in the US. Experts believe that Tesla could deliver more than 2 million vehicles in 2023, and analyst thinks shares could soar to $360 over the next 12 months. A key theme behind the analyst optimism is Tesla's improving production capacity. To this end, the Wedbush analyst thinks annual deliveries can soar next year, rising from less than 1 million in 2021 to about 2 million in 2023. While such staggering growth may seem unrealistic at first glance, Dan Ives' prediction for Tesla to deliver 2 million vehicles in 2022 is actually quite conservative upon closer examination. Ives increased Wedbush's 12-month price target for Tesla stock from a split-adjusted $333 to $360 in late August, citing Tesla's improving production rates at its high-output factory in China and the company's overall momentum heading into the end of the year. It is a known fact that Tesla's Shanghai factory suffered major setbacks earlier this year when the government restricted factory operations as part of its efforts to slow the spread of COVID-19. But the automaker said in its second quarter update that production rates at the important factory have not only rebounded, but have risen to record levels by the end of the period. As investors view this momentum alongside Tesla's reported continued improvement at its factory in California and its ramp-up in production at new factories in Texas and Berlin, 2 million deliveries in 2023 begin to seem within reach. After all, Tesla's factories are already tooled for annualized production rates of more than 1.9 million units annually. More than that, Tesla hasn't indicated any intention to slow down its investments in production capacity expansion. In fact, the company has indicated that it expects to have its current manufacturing capacity fully utilized by the end of the year. During the second quarter earnings call, Tesla CEO Elon Musk said that the company has a good chance of exiting this year at 40,000 vehicles a week. This translates to an annualized run rate of more than 2 million units a year. Although the delivery of 2 million vehicles in the following year, it would represent only a fraction of the company's vision. At the recent annual shareholders meeting, Musk said that the company eventually hopes to have built 10 to 12 factories, with the new ones supporting massive output of around 1.5 to 2 million vehicles per year. Subscribe to this channel for more Tesla stock predictions.